have much time left shortly. But first, yesterday the country's main banks urged the central bank to scale back proposed new restrictions on how much they can lend to home buyers, warning that first-time buyers could be priced out of the market. The new rules would require potential buyers to save up to 20% of the price of a home, as banks would be forbidden from lending any more than 80% of the value of the property. Our reporter John McCartney has been looking at what the new rules will mean for first-time buyers.
There is a roof garden. I haven't got a key because the tenants have it. Well, the tenants.
It's 6 o'clock in the evening in Blackrock in County Dublin, and an apartment is being viewed by potential buyers. This property is on the market for €335,000. The potential buyers all have mortgage approval, but under proposed new central bank rules, future buyers will have to come up with a 20% deposit. In the case of this apartment, that would amount to a deposit of €67,000 if it were sold for the asking price. Morgan Hickey Crow is a potential first-time buyer looking for a new home.
There's a lot of cash buyers out in the market, which obviously doesn't help things. And if these new rules do come in the new year, I think it's going to be even more lopsided in favour of cash buyers. So I found that there's been a bit of a rush on in the last couple of months especially, and people trying to get something before the new year because I'm mortgage approval, but I don't know what's going to happen in 2015. So certainly in the last couple of months since the central bank have announced the new rules, there has been a rush.
When it announced the proposed new rules, the central bank said the measures have been carefully considered, taking past experience into account to ensure that borrowers and lenders can withstand potential economic or property market shocks in the future without financial distress. But not everyone agrees that the rules are pitched at the right level.
Will first-time buyers be able realistically to save a 20% deposit that would allow them to get a foothold on the housing ladder? And that's an open question. My sense is that is probably very challenging for a lot of first-time buyers, particularly now that the bank of mum and dad is probably closed in many cases.
Dr. John McCartney is Director of Research at Savills Real Estate Agents.
And you would have to have a number of concerns there. I mean, the first concern would be, sort of a social concern that people are excluded from the home ownership and, they're pushed into renting, which is okay for a while, but many people don't want to do that for as a long-term proposition. And the concern would be that with rents very high already and rising sharply, that I suppose the requirement to service that level of rent would prevent them saving enough to eventually get on the deposit. So the idea of home ownership would actually be drifting away from them rather than coming towards them.
But one group which represents distressed borrowers believes the new rules are prudent. Ross Maguire of New Beginning knows that the 20% deposit is a big ask, but he says imposing strict lending rules on credit could bring house prices down, as well as having other added benefits.
There are benefits to it, but those benefits won't be seen today or tomorrow, and they may never be seen, in fact, because what's happening is the benefit is that the crisis doesn't re-happen. But I think that we need to look at other ways of, it's not just deposits. For example, there could be a way where people could go into housing as tenants with options to buy later on. That's something that is an obvious potential solution to this. And other ways of strengthening the rental market, and of course strengthening supply.
Earlier this month, the central bank governor, Patrick Honohan, responded to criticism of the proposed new rules, suggesting that a mortgage insurance scheme could reduce the amount that borrowers would have to save. But Ross Maguire of New Beginning says there should be no watering down of the proposed new rules.
This is concerning because here you have the central bank stepping up to the plate for the first time, albeit long after the horse is bolted, saying we're not going to let this happen again. They propose something and then within a very short period of time they seem to be rolling back from it. That there's this inexorable pressure from politicians, from society generally, to let people have access to credit. And we've seen what that does. So we need to come up with ways where people can have housing that they're happy with and that works without having to expose them to such huge risks that we all know post-Celtic Tiger.
Yesterday, one major lender in the country, Ulster Bank, said that some 68% of all of its mortgages to first-time buyers this year would have fallen outside of the new loan-to-value and income thresholds set down by the central bank. That would leave buyers like Morgan Hickey Crow with a lot to think about as they search for their first home.
My gut feeling is they're fair, but things should be looked at on a case-by-case basis. It shouldn't just be a blanket rule for everyone involved. Everyone got sort of burnt before. We got a bit carried away ourselves a couple of years ago. So, we need to make sure that doesn't happen again. But at the same time, first-time buyers shouldn't be priced out of the market because of these very stringent rules.
That report by Justin McCarthy, 7:46.
Now, one of the understatements of the year on the Late Late Show website, which says